Welcome back. You're with us here on the market, and we're in conversation now with Nitin Nayar. He's a partner at Filter Capital. Nitin, thanks so much for joining us this morning. Predominantly, Nitin, we've seen this huge transition towards tech, digitization, leading to a lot of companies there in the space and growing rapidly over the last few months. According to you, what would you say has been the key driving force or the key theme that's emerged out of this difficult time? Because when it comes to some of the companies in the online and tech world, it's really been ripe for opportunity.
No, absolutely. I mean, I would start off by saying tech is more important than ever. And I think it's a theme that was playing out, I would say, over the last 2 or 3 years, perhaps even before the advent of COVID. You've begun to see new players emerge in industries such as retail. Look at what's happened in e-commerce and payments. Look at what happened in mobile payments as well. There's been just a tremendous amount of activity in the sector. And I take a step back and say, look, we've always been a young population, increasingly connected. There's just a tremendous amount of increase in consumption in India now. And with this, the tech story has been around over the last few years, but what has changed is just the scale and the materiality of it. So I was looking very recently at some stats around e-commerce and growth of e-commerce. I mean, e-commerce is now 25% of the size of organized retail. Organized retail must be maybe 7-8% of total retail in India, but now e-commerce is catching up quickly. Look at payments. Look at what's happened with UPI, for example. UPI has overtaken debit and credit card volumes. That's quite impressive. And when you look at the ad market in India now, you now see digital advertising actually overtaking print. So this is a theme that's really been playing out over the last few years, but we've seen that, of course, accelerate over the past year due to COVID. During lockdowns, for example, while offline retail was shut, you did see online retail continue to grow. And based on what we know, online retail probably grew 20-25% in FY21. Similarly, if you take a global view and you look at the IT sector, for example, the IT sector, global IT spending actually declined. But during COVID, because of online demand, because of work from home, specifically digital transformation projects have continued to increase, which of course benefits Indian IT vendors as well. And then you look at sectors like online education, right? I mean, we've heard so many stories about how during the pandemic, during this period of time, you've seen online education companies, online gaming companies, online streaming companies basically double the number of users that they've had. So while this has been a theme that's played out over the last few years, the two takeaways here is, number one, it's reached a level of scale and materiality that it's hard to ignore. And number two, the trend is really only accelerated as a result of the pandemic. And one of the things that we look at and we find very interesting is that if you look at some of the leading sectors in India now, you're beginning to see digital players be the number one players in those sectors. I mean, look at logistics, for example. Delivery is the largest logistics player in India, full stop. Look at education. Byju's is the largest education company in India. And it's an interesting example of an online education company or an online company acquiring an offline company, as opposed to the other way around. I mean, we were all impressed when Walmart acquired Flipkart. Here you have Byju's acquiring Akash for $1 billion, which is a pretty big deal. If you look at brokerage, for example, I read recently that I think 25% of all NSE turnover is now mobile driven. And you have players like Zerodha and Upstocks having more accounts now than traditional brokers. And then look at brands. Players like Lenskart, they're the largest prescription eyewear company in India. Nykaa has made tremendous headway in beauty and personal care, and look at what FirstCry has done on the children's apparel and toy side. And the impact that technology's had has really been tremendous, and we're now beginning to see that, of course, percolate in terms of how Indian corporates are reacting. I mean, think about what Reliance did in 2020 during the depths of the pandemic. They were able to raise tens of billions of dollars to build out Jio. and to build out their retail business. And look at Tata with the acquisitions they've made with Big Basket, really beginning to focus on building out their digital ecosystem as well.
Nitin, what about valuations? Has there been a shift in how we're looking at those, or the way foreign capital is looking at those when it comes to the Indian market? As you described, we're seeing an escalation of growth. We've seen larger companies. But what about valuations? Where do we stand on that?
Well, before I talk about valuation, why don't I maybe provide a bit of context on just the quantum of deal activity we're seeing in the space too. That's also pretty substantial. I mean, we're investors in the VC/PE ecosystem, and one of the points that we've seen now is that over 60% of all private equity and venture capital deals are actually technology-led in some way, shape, or form. So this is sort of a segment that even investors are beginning to realize is pretty much encompassing the entire kind of VC/PE ecosystem. We have over 50 unicorns in India. We're the third largest in terms of the number of unicorns, and that's only second or third to the U.S. And China. With respect to valuations, I think one of the things that technology investors always like to point out is the first is downsides tend to be capped and upsides have the potential to be unlimited, which is why you end up seeing investors always comfortable, or many times comfortable, paying what appear to the average layperson investor to be rich valuations for market leaders, because they say, look, the path for these companies to grow is tremendous. We think that's doubly the case in a market like India, where there's just so little offline penetration thing that you really do have a tremendous amount of runway. I mean, look at a company like Delivery, for example. They pretty much cracked it in terms of e-commerce logistics. But when you think about the overall logistics industry and how that is ripe for disruption because of the advent of GST, and how that is going to result in traditional enterprises re-architecting their supply chains, not just e-commerce companies thinking about their supply chains. That means the runway for a firm like Delivery is actually quite substantial, extends beyond just e-commerce. And I think that the many investors who look at technology businesses in India see the same theme playing out for many of the businesses that they're investing behind.
Right. Nitin, you've spoken about the potential of IT globally, but if we were to talk specifically about India, it is shaping up, as you said in your note, to be a banner year for tech investments. Where is it within, some of the recent IPOs, within the listed space, within some of the other tech startups that you're sensing opportunity in India? I'm just talking about the profile of companies that, you would look to invest in or have potential investments in.
Well, actually, I think you made a really interesting point there, which is, what is really happening in the public markets in India vis-a-vis tech? I think this is a question people asked a couple of years ago, which is, will Indian tech companies list in India? Will the public markets be able to digest these fast-growing but loss-making business models and these rich valuations? I think 2021 is actually the year when we find that out, because based on our count, at least 20, but probably many, many more, maybe double that amount of companies have either filed or announced an interest to file, or in conversations with bankers that they intend to file because they see the IPO markets open. So I think public market investors in India will finally have the opportunity to invest in a number of companies, whether it's Amato, which has already filed a DRHP, whether it's players like Nykaa or Policy Bazaar or Delivery or Swiggy. Many of these companies have either announced or done pre-IPO rounds. CarTrade, an online auto classifieds platform, recently did a pre-IPO round. So I think there will be that opportunity for Indian public markets investors to finally be able to invest in a number of these companies. And what's interesting is if you look at the US markets, I mean, 8 of the top 10 companies, listed companies in the US, are technology or tech-led businesses. If you look at China, 4 are tech companies out of the top 10. And in India, we have TCS and Infosys. But the thinking is, look, if you take a 5-year view, 10-year view, you should see many more large cap Indian listed technology companies begin to emerge outside of IT services. And what's interesting is to see how that plays out over the coming year or two, whether the public markets are actually receptive. For us at Filter Capital, we invest primarily in private companies. These companies may be 2 to 3 years, maybe 4 years away from listing. And so we've been spending a lot of time looking at next generation IT services companies, primarily in AI or ML or digital transformation. We're huge fans of the SaaS ecosystem coming out of India. A number of Indian software companies, either targeting enterprises in Asia or enterprises and SMEs globally. That's been a big trend, and we think there are many more such companies which will begin to emerge out of India. And we're spending a lot of time looking at sectors like logistics, logistics software and logistics services, as well as payments, where we see a tremendous amount of innovation continuing to play out there. Even though you see, in the case of logistics, there are players like Delivery and Ecom Express. We think there's a next generation of companies emerging there. And on the payment side, there's of course BillDesk, PayU, and RazorPay. But as enterprises and consumers expect more innovative solutions, you'll see new players emerge there as well.
Nitin, where is it that you see some of these tech companies presenting themselves with a challenge, or what are the key challenges rather that you foresee? Is it, as Abha brought up, valuations? Is it the overall stretched financials, digging too deep into their pockets, leaning heavily on investors? Where is it that you see the challenges being presented, where there have in the past been a lot of tech companies as well that have had to perhaps eventually wrap up or close down completely? So in this current environment, what are some of the key challenges?
Well, there are 3 challenges that that we think about here at Filter Capital. Let me start off by, thinking about the companies that are going public, right? The companies that I mentioned that are about to list or trying to list. There is a question about whether the public markets are going to accept these business models. Many of these companies are articulating that there's a visibility to break even, but the question will be, will the public markets buy it? There are companies that will want to trade on revenue multiples as opposed to EV/EBITDA or PE multiples. Will public market investors be comfortable with that? And so I think that's going to be the big test over the next year or so, is how do public market investors who have this first opportunity to really react at scale to these business models, how will they think about them, and will they give these companies rope, or will they be very hard-nosed about it? The second, of course, is COVID, right? The question that we have is, is there going to be a third wave? Is there going to be a fourth wave? Is it going to be a recurring theme for the next 1 or 2 years as vaccination rolls out in India? Now, we have seen online models accelerate through the pandemic, but then at the same time, there are lockdowns, there are difficulties, there are hits to GDP growth, hits to per capita income, questions about purchasing power of consumers. So the COVID risk, I think, is not entirely behind us. I think it's fair to begin looking at COVID recovery type business models, but it's of course very difficult and too soon to tell to write off the COVID risk. And last, of course, which is the global phenomenon, which is, what is this tussle between inflation expectations and interest rates? The view has been over the last year or so that globally, and India has, of course, been a beneficiary of that, and India Tech has doubly been a beneficiary of that, is that when inflation expectations are low and interest rates are low, there's a hunt for yields globally. And there's been a question about whether that, tap gets turned off and whether the Fed has to increase interest rates going forward. And I think in early 2021, you've seen some, wobbly, how's Bitcoin moving? What's happening with SPACs? Some of these highly speculative assets have been slightly hit. but then the Fed kind of will make an announcement that, well, maybe they're not too worried just yet about inflation. So that's the other thing we really have to watch closely.
Right. Nitin, great to have you on the show. Thank you so much for taking time out and sharing with us all that insight.